All right. Welcome back to Seven Figure Flipping. I'm your host, Adam Whitney. Today, we're going to talk about why real estate is so favorable because of taxes. What do taxes do for you, and why is it such a huge benefit? So, let's talk about number one is in real estate, it gives you an opportunity to make a ton of money, hundreds of thousands and millions of dollars in active income. That's just fact. I've seen so many people do it. We've done it in our own business. And with all that income often comes taxes. Now, here's the thing: you cannot out earn a bad tax strategy. If you flip five houses and made great money, but you spend a lot of it and then your tax bill eats it up, that's a real problem that you need to solve through tax strategy. You may not realize this, but when you're making a lot of money, taxes are actually your biggest expense. So treat them like a strategy, not a bill. And I'm going to give you some tips on how you can do that. First off, the real estate is super tax advantaged. The tax code is written specifically for real estate investors to thrive. There's a couple things in the code that make this incredibly powerful for real estate investors. The first thing is depreciation. Okay, what depreciation means is that particular real asset is going to lose value over time in terms of the construction piece, not necessarily how much it's worth, but they know that wood only lasts for so long, shingles only last for so long. So it's written into the tax code that you can write off those expenses or those potential future expenses on properties. Depreciation is not going to get rid of your taxes, but it will defer your taxes. So, what do I mean? In 2023, if you made $600,000, but you had $600,000 of depreciable losses, paper losses, by the way, they're not real. They're just saying that that property's value in terms of the construction has went down that much in the amount of time that you've had it. So therefore, you can write that against your passive income. Now, if you claim real estate professional status, which if you're a real estate investor or real estate agent and you're doing the qualified activities for 750 hours a year or about 2 hours a day, you can claim that. You can take those depreciable losses against your active income, which means you could theoretically pay no taxes on your active income. I have not paid tax on my active income in a couple of years, but it's primarily because of all the depreciation I get from my real estate. Okay, what's even crazier about depreciation is you can do something called a cost segregation study, which instead of depreciating an asset over 27 and a half years, you can take that and condense it all primarily into that year. So why you would do this is if you made a lot of active income in a year and you had some assets and you did a cost seg study, and it could help you reduce your taxable income so you could keep more of it. Okay. And then there's all kinds of other write-offs like materials, mileage, education. So if you're paying for any coaching or mastermind, those get expensed. And obviously there's a return on that, your home office, your internet. There's so many things you can do as a business owner in real estate that can help reduce your taxable income. Now, if you're flipping or wholesaling, that's active income and they're taxed at your regular income rate, but you can start building wealth with smarter and legal strategies, like, as an example, setting up your real estate investing business as an S corporation instead of just an LLC. So as an LLC, you're going to get taxed at typically a higher rate than if you were paying taxes on on W-2 income. So keep that in mind. Now, if you are running a business and you're taking a W-2, you do have to take a reasonable salary. There's no real clear guidelines on that. So your CPA will be able to best give you information on that. So paying yourself a salary can actually help reduce your taxable income. And then reinvesting your money into assets. So if you're flipping and wholesaling and making a lot of active income, We have this thing we talk about in our community all the time: flip two and keep one, flip two and keep one. Obviously, it's got to be a good investment and it's got to make sense for you. But you've never heard a real estate investor in hindsight say, I really regret keeping these properties. In fact, you hear the opposite. What's your biggest regret or what's your biggest mistake? And most older real estate investors will tell you, my biggest mistake is not keeping more of those assets, because they've seen how much they've went up in value over time. Okay, so what can you do specifically to prepare for next year's tax season? One thing that I do is I do strategy calls. I don't wait till the end of the tax year and then deal with a headache and a mess and stress. I do my tax strategy call in the beginning of the year, in the middle of the year. I would recommend you do it quarterly. Now, of course, this will cost you some money. So to me, it's absolutely worth it. If you spend $300 doing an hour call with your tax person and it saves you $30,000 in taxes, would you say that that's worth it? I mean, I would. So yes, absolutely. Strategy is something you need to be doing with your CPA to prepare. Okay, the other thing that we have talked about on previous podcasts is really big. If you're running an active wholesaling or flipping company, you need good bookkeeping. You need to have your QuickBooks updated and categorized correctly. For most of you who are entrepreneurs, you shouldn't be doing this yourself unless that's your background. You should be outsourcing to a bookkeeper. We personally like to use Auxlie, Auxlee. I'll put a link below for you to check them out. That's who's been doing our books for the last 3 or 4 years in our real estate business. They also do my title company, but we outsource that to professionals who know what they're doing. Bottom line is you need to be planning instead of scrambling when it comes to your taxes. Now, if you're just getting started, it's a good time just to learn the tax strategies that can benefit you. It's also a good time for you to go out and find a CPA who invests and understands real estate, especially if you're flipping houses. You want somebody who understands the ins and outs of that. So taxes don't always have to be scary if you treat them like a tool. They're just another part of your flipping or wholesaling business, or even building a rental portfolio. Real estate gives you so many options. So start planning now, and next April will feel very different than it probably does for some of you. Now, if you're looking for a CPA, because I know a lot of people ask me, do you have a recommendation for a CPA for real estate investors? We use the Advanced Tax Group, or ATG, and I'll put a link below for them as well. They're phenomenal. They are for real estate investors. They understand real estate investors, and they're absolute pros. Okay, if it's April, your taxes are submitted, or you're getting an extension, maybe some of you are feeling the pain. Hopefully you take this episode to heart and you get your taxes in order, get a good bookkeeper, and get a good CPA who can do strategy with you. All right, thanks for tuning into this one. If you like this episode or any of our episodes, do me a huge favor. Like I ask, is each episode is leave us a 5-star review. It just helps us to reach and impact more people, and you know that impact is incredibly important to us. Okay, thanks for tuning into this one. I'll see you on the next one.